Hey guys, we're gonna start a new series. Let's talk about the stock market versus Forex versus Bitcoin. If this is something that excites you, check this video out. Hey guys, so this is our very basic video talking about Bitcoin, Forex, and the stock market. But I'm gonna create a series off of this. If this is something that will benefit you, if this is something that you like, as you all know, I do some videos with slides put in together. But this is just me sharing different thoughts about Bitcoin, Forex, and the stock market. I just want to see if this gains traction and this is something that's interesting to a lot of you, because I've been doing some videos on Forex and Bitcoin over the past years, but it's something that I've seen not a lot of Filipinos still want to grasp. No, we're still at the level where the stock market is still risky to a lot of people. That's why I've been just focusing on that realm as well. But if this is something that interests you, just click the like button. The more likes I get in this video, the more I'll see that, hey, there's more people actually wanting to know more about this. But anyways, if this is something that you like, yeah, just comment, I want more. Then we're gonna do more videos off of this topic as well. So I'll just start it with this. What's the main underlying difference between the stock market versus Bitcoin versus Forex? Because a lot of people think that they're interchangeable. A lot of people think that they're relatively the same. A lot of people think that, hey, if this is the same thing, I can actually try to dabble into all of this. So first things first, let's start with the less risky one. So in terms of risk, the less risky is the stock market. The one in the middle is Forex trading. Then the last one, the riskiest among all of them, could be Bitcoin. This is just my perspective. There could be other, again, there's no right or wrong in investing. Each of us have their own analysis and opinions towards it as well. And a lot of people will say, maybe the market is a bit riskier than all of the other asset classes. But anyways, why do I say it's a bit risky? As you all know, the underlying asset when you go into the stock market is essentially you buy stocks. You become a part holder of these companies. You buy Jollibee if you're invested in the local market. You buy McDonald's if you want to invest in global stocks as well. What's so interesting though when you invest in the stock market is basically you're buying companies, and it's easy for you to actually see what's going on because there's financial statements. You get to know, you get to see if the company is doing well, if it's doing bad. You know the amount of cash that they have, you know the debt that they have, you know the dividends that you're getting off of it, you know if the company is growing. So you have a sense, you can have a sense to value it, if it's something worth buying at this point in time, if it's actually cheap, if it's actually something that based on your analysis, you could actually see that, hey, at this point in time, I see that it's gonna grow by 20% more per year at this price. It's grossly undervalued, and that's what's nice about the stock market. The reason why I say the stock market is less riskier is because I can value a stock based on what it's earning. The reason why I say the stock market is less riskier also is because if nothing happens to the market, it stays flat. If the company that I have has dividends, then I still get a rate of return. If the dividends is growing, then I'll get even a higher rate of return later on. And as long as the company will not close down, then my investment won't go to zero. There might be some paper losses if I'm an investor, but I know as long as it's doing good, it's healthy, then it won't go to zero. Now, if you're going to the Forex market is basically, you're not buying shares. Please remember, you are just swapping one currency to the other. So if your currency pair, let's say, is US dollar to euro, you're not buying shares of euro. You are swapping your US dollar to a currency. It's just to euro. It's just like you going to currency exchange when you're at the airport. You have, for example, you have an American visiting the Philippines. He has $1,000. Then he needs to spend it here in the Philippines. Then the most logical thing for that person to do is that $1,000, he needs to bring it to a currency exchange. If the exchange rate is 50 per peso, $1 for 50 pesos, then that $1,000 would give him 50,000 pesos. That's essentially it. And a lot of people go into the Forex market just to also speculate on what could possibly happen. Now, here's the underlying difference. In the market, in the stock market, you have you have a trend eh. You get to see, hey, this company is earning, this company is expanding, McDonald's is expanding, Jollibee is expanding, Nike is building this market share, Apple is getting this much sales. You get to see, you get to have a trajectory on how they're earning, how they're good, and their valuations. When it comes to the Forex market, it's basically supply and demand. It's basically you speculating that, hey, because of Brexit, the pound may not be as good compared to the dollar. The British pound might depreciate even more, and this might put more strain into it. So you are sort of speculating based on what's happening there. So it's purely, for me, it's a supply and demand game. If there's more bad news on a certain country, it might be bad for their currency versus whatever currency you're swapping it into. Let me put it into Filipino context and perspective. Remember the time when oil prices were higher? Remember the time when inflation was also relatively higher? Remember the time when interest rates in the US were higher as compared to interest rates in the Philippines? You had a lot of funds swapping in their peso into dollar because they need to take it out of the Philippines for them to be able to use that money and invest in more in the US markets as well. So that being said, they needed to sell peso and swap it into dollar, supply and demand, because there was such a greater demand to put it back into dollar. The peso started to go down as well. So it's heavily, in my opinion, supply and demand. It's heavily based on where are more people buying and where are more people selling. Essentially, in the Philippines, if, for example, more foreigners want to pull out their money and want to transfer it into more developed markets, the common narrative is you will see the peso depreciate up against the dollar. But if you see also, like example, foreign OFWs or Filipinos abroad sending in dollars to the Philippines, if they're sending in more dollars to the Philippines, that will appreciate also the peso up against the dollar, because for them to be able to use the dollars that they're sending and spend in the Philippines, they have to swap that dollar into peso. Again, if you swap that dollar into peso, supply and demand, there's a larger demand for people buying peso, the peso appreciates, the dollar will go down. So essentially, you're not buying ownership, you're not getting ownership of something, you're just swapping your currency to another currency. So it can go in one direction or the other. And one of the underlying differences, just saying it from a Philippine context, because in the Philippines, we don't have shorting yet. In Forex, you can short, meaning if it's bad for the British pound, then you just short the British pound. You just go into the opposite direction, that you also make money when the markets go down as well. And that's one of the underlying features that a lot of people like in the foreign markets or in the Forex markets. And one of the things that's different between the Forex market and the stock market is basically this. The stock market in the Philippines, you have 9 to around 3:30. In other markets, they also have different times where the stock market is open. The Forex market is open 24 hours. Monday to Friday, 24 hours. So you have continuous trading going on. So a lot of people like it because there's a lot of liquidity. A lot of people like it because there's a lot of volume. And for those who like to use technical analysis, the interesting thing about technical analysis is it's predicated on volume and past prices, and that's what you have in the Forex market. Of course, if you're trading US markets, you also have a lot of volume, you also have a lot of volatility there, but at the end of the day, Forex markets have a lot more volatility and have, if you're relying heavily on technical analysis, that's what it will do for you. The difference also between Forex is if you swap currencies, you don't get dividends. When you go into the stock market, even if you're holding a stock that gives you capital appreciation, as long as you don't sell it, those years that you are holding on to it, you still get a rate of return from the dividends that you're putting in as well. So I hope you got the difference. No, stock market, cash swapped into shares that gives you ownership into a company. Forex market, cash swapped into cash still, but just another currency as well. So there, let's move into Bitcoin. Bitcoin, on the other hand, is also a currency, but instead of it being a fiat currency like the US dollar, like the yen, like the British pound, like the euro, like the Philippine peso, Bitcoin is a digital currency. It's something that's not regulated by any central government. I just want you to imagine this. If you're using PayPal, the money that you are using in PayPal to transact, you don't see it anymore. It's just something that's digital, right? If you're using GCash, if you're using PayMaya, all of the transactions there are basically just digital transactions. The money that you have there are just transmitted via your phone, via your laptop, via your iPad, and the value is inherent based on what's written on the app that you're using. If it says that you're transferring $100 or you're transferring 5,000 pesos, at the other end, it will also say that you are receiving $100 or 5,000 pesos as well. So that's how I want you to picture Bitcoin. It's different, but it's like that. It's digital money. It's not anymore money that's tangible. And why is it not? So a lot of people are transferring US dollars to Bitcoin. Please remember this. In the world of cryptocurrencies, there's over 1,000 currencies out there. They call it altcoins, but the most prevalent and the most used, the most talked about is Bitcoin. And for me, for it to be a legit currency in the future, there has to be mass adoption. And that's why I really believe this. In terms of cryptocurrencies, I believe 99% of the cryptocurrencies that you see will most likely fail, because if they're not adapted, they're not used, then how can they be established as a currency? For it to be a currency, a lot of people should accept it, but not just accept it, a lot of people should transact with it as well. When you see Bitcoin to be used to pay your bills, to transact, to give salary to other people, that's when Bitcoin becomes more prevalent. Among all of the other coins that are out there, I think Bitcoin is one that has one of the biggest market cap, one of the ones that get transacted more as well. It's too early to tell if it will be the currency of the future, but what I do know is this: its underlying technology called blockchain is what's more interesting, because we're so early in the game, and I've been saying this all the time. Bitcoin could be Friendster. It's the first in the game, but we don't know if there will be something new, a Facebook that will take over and will take its place. We don't know if Bitcoin is Facebook already, or there will be something new later on that will take it. But what I do know is this: cashless currencies are here to stay. I don't know what shape or form it will be 5-10 years from now. I do not know what its shape will be, but what I do know is this: it's already happening in China. Most of the transactions that you see there are mostly cashless already. If it's happening in China that most of the transactions are already cashless, then guess what? It's gonna happen also in the Philippines. We're just 3, 5, 7 years delayed from what's happening in other countries already in terms of mass adoption, especially for technology. But it will happen. If it will be when you say cryptocurrencies, also it will be just one central currency that a lot of people will use. That if you're using PayPal, you have to remember this: if someone pays you US dollar, it's still converted into peso if your underlying currency in your PayPal wallet is peso. But if you're using Bitcoin, everyone will be using Bitcoin already, and that's what you will use for you transacting. So try to imagine PayPal, but if someone sends you money, that money that was sent, that Bitcoin that was sent to you, is what you can use already to pay for your bills, to pay for your water, for you to be able to eat, to buy other stuff as well. So it's like a currency. The thing about that, why it becomes a bit speculative, is because it's not really used yet as much. It's not yet at the point where a lot of people are accepting it. It's not yet at the point where a lot of governments are accepting it yet. But a lot of people are buying into it with the speculation and the hopes that if it becomes the currency of the future, then a lot of people will start to use it. Then you get to see adoption. Then you get to see, hey, what I bought and I started earlier at a low price, because a lot of people are using it now, the value might be higher. But again, it's still borderline speculative. Similar to the Forex market, if you hold it, you don't get dividends. It's pretty much supply and demand. More people buying it, more people putting into it. That's why you saw it also push up. No, you saw the large move. I think it was more than 2 years ago. I was in Taiwan when it was happening. I was seeing Bitcoin close above 15, 16, 17,000 US dollars per share, pushing towards 20,000. But that was purely based on supply and demand. It was purely based on people trying to buy it at a higher price as well. No valuations attached to it yet. So basically, Bitcoin has a bit of risk as compared to the Forex market, because if you're going to the Forex market, you know that, hey, this is something that's generally used. That $100 right now can buy me this. That $100 can be swapped into euro with this valuations. It's, you know, also that a year from now it will be close to that amount, barring something bad that will happen to that country. But for Bitcoin, no one knows where it will be as well. So we're now at the 15-minute mark. I'll try to end it with that. Yet there's still so much to talk to in terms of risk, compliance, upside, earnings with regards to stocks versus Bitcoin versus Forex. But if this is something that's a bit enjoyable to you, the next set of videos I'll try to put graphs, I'll try to put charts, I'll try to put more informational data. But this is just me sharing some ideas towards the stock market, Bitcoin, and Forex, so that for those of you who are starting out, for those of you who've heard about this but are thinking, what is this? I've been hearing it. This is something that's legit. This is something that's just a scam. Please remember, when this is also for people who don't know. If it's offered to you networking style, then that's not the real Bitcoin. Please stay away from that. Real Bitcoin is bought via exchanges. It's something that you buy also from wallets. And the largest here in the Philippines is coins.ph. You can search that as well. But that's a storage platform where you store it like a PayPal wallet, but for it's like for Bitcoin, Ethereum, and other cryptocurrencies as well. So if you have questions and you want me to make a branch of topics out of this series, so I'll make this an official series already, but I just want to know what topics you want me to talk about. But it will literally be stocks versus Bitcoin versus the Forex market. Comment them below. We're at the 16-minute mark. Comment, I'm staying. Comment, hindi boring yung topic na to. I want to know that as well. Comment, I'm not bored, if you're staying up until this point in time. Comment also, I don't know, what are your thoughts about this? Where will you put in more money? Stocks, Forex, or Bitcoin? And there. And for those that want to learn more about technical and fundamental analysis, I always invite people to do this. I always invite people to have an opportunity to learn from a classroom setting. My sessions will be in Taiwan, February, March, Manila, April, London, May, Doha and Singapore, June, Auckland, New Zealand, July, Sydney, November, Tokyo, and Dubai. All of the links for that, all of the details are just in the description below, so that if you want to enroll, I hope that I get to see you there as well. These are for people who want to learn from a classroom setting, but for those who want to learn naman from a online course type of class, I have two sessions. One is with Chinkitan. It's a Tagalog stock market basics. It's also in the description below. Second is an online course where we talk about the basics of business and the basics of investing and the basics of the stock market. It's called Make Money, Grow Money. Link is also down in the description for those who want to learn with that. I'm with Shansi naman for that course. I hope you guys join that. And lastly, for those who want to consume via books, all of the books are in the description below. You can order them via Shopee and it will be delivered wherever you are in the Philippines. So I guess that's it. For Bitcoin, Forex, and stocks, I trade stocks, I invest stocks, I go in Philippine, US, and Singapore markets. I have Bitcoin, I have other cryptocurrencies. For Forex, I also try to store other currencies. I just don't trade the Forex markets from a platform as well. But those are the things that if you know what you're getting into and you always expose yourself to an amount of money that tanggap mo, if it does not go well, you are okay with it. If it goes to zero, you can still sleep well at night, then invest. This is what I keep telling people, rather that you lose money on an investment rather than buying stuff that you don't need that later won't have any value. Because if you lose money from an investment, guess what? It's a story, it's a lesson, it's not a failure. It's something that will allow you to pivot and for you to be better in the future as well. Because if you start deploying capital, pagbubutihin mo kasi pera mo yung nakasalalay, pagbubutihin mo also, and if it does not do well also for you, that experience alone will help you to get better in other investments. That's why I keep telling you, don't just watch my videos. I hope that whatever gets said here is something that will cause you to start. It's something that will cause you to execute. Because again, and I'll never stop saying this, that's all I want. I just want you guys to just move from being just a consumer into an investor, because that's what we need. We need this generation to rise up. We need this generation to do better. We need this generation to raise the level, raise the standard, that we don't just merely consume, but we create, we invest. Because when you start creating, when you start investing, you give opportunities for other people who cannot create opportunities on their own, and you start creating the framework that other people can see, teka, oh nga, no, I do not need to rely on the government for me to make money, but I just need to govern my own financial future. It's time that you take control, you take responsibility of your own financial future as well. So that's it for now. Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.